Hello, good morning, good evening, good night, wherever you are. My name is Sleepy Bull, and I will be the host for you tonight on this episode of Wave Watch. We are in serious trouble, folks. In serious trouble. If you see on the screen here, I have drawn two trend lines. Before I go into that, I want to say welcome back to all my viewers who have been watching this channel repeatedly. I thank you very much for the continuous support, and if you appreciate the content, if you appreciate the alpha, if you appreciate the real talk of what's going to come, I ask that you like and subscribe, and if possible, comment. So that the YouTube algorithm can show some love. Thank you. Now, excuse me. Back to the charts. So, in this video, we will be going over the S&P 500, the soon-to-be bear market, why I believe we will have a bear market, the resistance lines that we can watch out for, and the levels that we can look at, and when we can expect the downturn to worsen, and when can we expect the downturn to reverse. Let's begin. So, like I was saying before, on this chart, you will see the S&P 500 SPX chart. And we have on this two trend lines. One connecting the 1930s top to the 2000 top. And the next trend line, we have the 2000 top connecting to the 2020 top. You can see where I'm going with this. Now, let's see how close we are to these two trend lines. Let's just zoom in, why don't we? Let's just come in here unbiased, with no predetermination, with a blank slate in the mind, just to see, and with a classic TA perspective. The line in the blue, as you saw earlier, is the line that connects the 2000 top right here with the 2020 top right here. And we are 5% away from that line. The yellow line that connects the 1930s top to the 2000 top we are, excuse the crazy movement of the mouse here, 7% away from that line. Now, ladies and gentlemen, what do you think will happen if we touch either of these two lines again? Excuse me. A massive sell-off. Nothing short of a massive sell-off. Now let's go into the macro count. Now, if we do break it, that is something I would say would be unforeseen. If that happens, I don't know what to say. Probably my best guess would be a runoff hyperinflationary scenario. But yeah, this is the wave count. Macro degree wave 1 that ended in August 2029, the beginning of the 1930s depression. That followed a sharp wave 2 that triggered 84% decline. All right. That ushered in the great American era of the 1930s all the way up until the year 2000. Wave 3 macro. Mind you, these I'm labeling them as primaries for all intensive purposes. Each one is a cycle. This is third wave right here. Each one is a giant wave. This is the third wave. Why is this five here? It's because this is a 1, 2, 3, 4 intermediary 5, right? Wave 3 ends as we expect. Sharp wave 2, sideways wave 4. Alternation. We have a WXY for the decade of, what is it called? The lost decade here. There you go. That's wave 4. And wave 5. Unfortunately, I wish I would have had some money to invest in the 2008 low, right? But I was just a tiny lad at that time. So this is wave 5. And it looks like how we would expect wave 5 to terminate either at the length of wave 1, which in this case would give us a wave 5 of 7,000, SPX being at 7,000 roughly, or the 618 retracement or extension, of wave 4. Luckily we passed it, but it looks like the next likely option is the 2618. Right, here we go, 6,500. Now something interesting has happened here, because as you know, usually wave 3 is the 618 extension of wave 1, but in this case it was the 2618 extension. So we can expect wave 5 to be the next one above 3. Coincidentally enough, we have a lot of confluence with the 272 and the 3. Very high probability. That's a very high probability play. I mean, we slightly grazed it above. Let's see if we actually even hit the 2414. I doubt we did. And yeah, I think it was the 2414. Let's check here. No. It was the 272. But yeah, we just overshot it a little bit, but that's good enough to give us a strong confluence. Yeah, 43, 44, overshot it by a bit. You know, this is macro scale. This is in logarithmic terms, so a little bit of wiggle room is necessary, just enough, not too much. But regardless of the fact is, this is wave 5. Now let's look at wave 5. Let's look at the count here. We have 5 waves for a 1, 2, 3, 4, 5 for a 1. Matter of fact, actually, I think I was going over this count and I was mulling it over in my head. I do think this is a 1, 2, 3, 4, 5. Just because this here is an extended third. This here is a 1, 4, 5. A 1 and 5 are the same. Extension of wave 4. This is wave 4 sideways correction. Fits all the requirements. Boom. Wave 5. 1618 extension. This is it. This is wave 5. So this is actually 1, 2, 3, 4, 5. Yeah, I was mulling that over, but did not quite finish that count. But now that I'm saying it here, let me just go ahead and change this here. There we go. 3, 3, 4, 5. Let me take this one out. Boop, boop. There we go. All right. 3, 4, 5. Okay. So this gives it a wave 5. Now what we're expecting is, because this is the final wave 5 here, we're expecting a complex correction beginning in a 1 large wave, 1 down, 2, 3, 4, 5. Now I'm not sure how we're gonna do this whole complex correction wave 1 down, because we see here that this is a 5 and it looks like it wants to do a WXY for a 1. Sorry about that, guys. Had to do a quick edit there. But like I was saying, it looks like it wants to do a WXY. I want to see something in the fashion of an ABC, with the terminus being worst case here, but most likely here. If in any event, it'll probably end up somewhere along the lines of here, most likely, for a probably 57% decline. I'm not trying to fearmonger, but we are coming up at a juxtaposition point here on the Elliott wave macro count. So yeah, we expect something to break down. We're 5% away from the trend line beginning in 2000 and 2020, and we're 7% away from the 1930s crisis trend line. Can we overshoot it for a 5th wave? Overshoot potentially, but that represents a very hyperinflationary scenario, in my opinion. And if we do come crashing down, like we just started here with this WX wave, it would probably be a complex WXY wave down, beginning in that macro structure. And even to state, if we do something like this, ABC or WXY, it'll be a 3-wave pattern, followed by another 3-wave pattern up, followed by another 3-wave pattern down. Just to reiterate. And yeah, that's my take on it, guys. And so, and the reason why I'm being so I guess, don't want to be an alarmist, but cautionary is the word, is because we are coming up against this trend line, and we just broke down from a wedge here. And I think that's all the time I have for you folks. I will be back in the action. Sleepy Bull out.